Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the Q4 and FY26 post-earnings conference call of Jyoti Resins Adhesives Ltd. Today on the call from the management team, we have with us Mr. Utkarsh Patel, Managing Director, and Mr. Samit Shah, Chief Operating Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended March 2026, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Good morning, everyone, and thank you for joining us today. On behalf of the management team of Jyoti Resins Adhesives Ltd, I welcome all our shareholders, investors, analysts, and stakeholders to our Quarter 4 and FY26 earnings conference call. FY26 has been an important milestone year in our journey, not just from a financial standpoint, but from the perspective of building the foundation for the next phase of scalable growth for the company. Beginning in the second half of FY26, we initiated a comprehensive transformations journey across the organization spanning HR, technology, sales, marketing, distributions, and operational processes. While these initiatives are still in the early stages, we are encouraged to see the first sign of tangible outcomes emerging from quarter 4 onwards. Despite a challenging operating environment during the quarter, we delivered a strong performance with revenues growing by 18% YOY, led by nearly 16% volume growth during quarter 4. EBITDA margin stayed steady at nearly 27%, which was in our range guidance for FY26. This revenue performance for quarter 4 is our highest ever quarterly performance in our history. These numbers reinforce our belief that the strategic directions we have undertaken is beginning to translate into stronger executions and market tractions. During the quarter, we also undertook one of the largest brand building initiatives in our company's history, leveraging our association with Pankaj Tripathi and as part of our national footprint expansion strategy. We partnered with Jio Hotstar during the ICC T20 World Cup to execute a high-impact ATL campaign. The objective was clear: to significantly enhance brand visibility, strengthen top-of-the-mind recall, and positions our brand among the fastest-growing wood adhesives brand in India. We believe this investment in brand equity will create long-term benefits as we expand into our newer markets and customer segments. What makes this performance even more encouraging is that it came despite multiple external headwinds, including an extended monsoon season in H1 and disruptions arising from the West Asia conflict in quarter 4, which was during one of the most critical business periods of the year. The resilience of our channel partners, employees, and the combined executions capabilities helped us navigate these challenges effectively and maintain our growth momentum. Looking ahead, we remain highly optimistic about the India growth story and the long-term opportunities within the wood adhesives industry. We are working aggressively to deepen our presence in existing markets while simultaneously expanding into new geographies. As part of this strategy, we are commencing operations and strengthening our footprint in new markets of Odisha and Chhattisgarh during May 26 itself. At the same time, we continue to consciously strengthen our presence in the OEM segment. Our initial efforts across West and Central India have delivered promising results, giving us confidence to further scale this business. Going forward, we plan to expand into additional major metro markets with a focused OEM distribution strategy aimed at gaining meaningful market share in the category. Overall, we believe the company is entering a new phase of growth driven by stronger branding, wider distribution reach, improving organizational capabilities, and deeper market penetration. While we remain mindful of macroeconomic uncertainties, we are confident that the momentum built in quarter 4 will continue as we progress on our journey towards becoming a 500 crores plus revenue company over the next 2-3 years. We are now open to taking the questions.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. We'll invite you to ask the question. We would request participants to restrict the questions to two in the first round so everybody can get a chance to ask questions. So till the question queue assembles, we'll take a question that has come in the chat from one of the participants, Mr. Arjun Shah. How do you define active carpenters on your platform firstly, and where do you see this number going in the coming future with the new states that are entering? Is the number seeing any traction? Is it increasing, or is there some level of churning where carpenters become inactive after a while? Do you see that happening a lot in new states?
Yeah. So, in this 19 20 years of journey, we have touched almost 350,000 carpenters in this journey. And from that, when we started this digital platform in 2018 around, so till now, we have registered almost 2 lakh carpenters into our platform. So from that, almost 60% are carpenters very much active. So who are using regular our products and making these loyalty points. So now into the future, a nearer expansion for this loyalty program is that we are aiming for more, almost 25 to 50,000 carpenters to onboard and engage with our loyalty program, as we are now penetrating and going deeper more into the newer states, UP, Delhi, West Bengal, like, and also now we are adding the Odisha and Chhattisgarh. So new registrations will come into the pipeline. So we are expecting 250,000 carpenters end of the year, we can say.
So his second part of that question is, do you have a target number in mind for the next 2 to 3 years?
So we are aiming that at least 3 lakh carpenters should be registered, as we have gone detailed through the data, and we are have the assumptions about the per shop carpenters, or that data we have. So we are aiming 3 lakh carpenters nearer future.
His second question is, the receivables this year have gone up in line with the revenue. Would that imply that days of sale outstanding in the new states is a lot higher? And would that also mean that receivables increasing in states where we already have an established business? Why is this happening, and where do we see this number normalizing?
Yeah. So, yes, you're right that the number has gone up last 2 3 quarters, but we are aiming for that nearly what was we were into the 24 25, that was 120 arounds. So we are aiming that within 2 quarters will come with that. And the reason is, yes, we can say that newer state, when we are starting, that we need to build the more relationship and more engagement with the new dealers. So it is taking time, and maybe some few more days going with the data sites. So in an existing state also, we have been last 2 quarters aggressive into the sales front. But these all sales are very much secure, as we are dealing with these dealers since so many years. So that can be maintained within 2 quarters.
Sure. We'll go to the participants who raised their hands.
Sir, we'll take the first question from Saket Kapoor. Saket, you can go ahead, please.
Namaskar, sir. Hope I'm audible.
Yes, you are all.
Yeah, thank you for firstly for the opportunity, sir. Firstly, अगर आप for the current year क्या volume guidance हम expect कर सकते हैं with the type of capacity addition that you have outlined in your presentation? If you could just give the ballpark number, what are we eyeing, sir, for the current year?
Yeah. See, I suggest that we have internally as a board decided that we don't give the specific numbers, as the geopolitical the issues are running. Also, see, if we go about the last 8 quarters, So almost from 8 quarters, 5 quarters, we have delivered almost two figure of growth. And if we talk about the FY25, we grew by 11%. FY26, we grew by 8%. So करीबन 19% का growth हुआ है 2 साल में. So yes, we are expecting that we should aim for the 15-20%. But I think it is better that this quarter is very much not the suitable time that we can disclose. I think because of the situation getting the normal, quarter 2 is the things where we can go for the 9 months growth for the exact figure. So, but we can expect about the obviously we are aiming for the 15-20% of growth for that.
सर एक्चुअली आपका जो स्लाइड नंबर 15 है 15 नंबर पेज देर इन यू डिड गिव अस सम अंडरस्टैंडिंग ऑफ हाउ the period between FY27 to 29 looks, whether in terms of the brownfield as well as the greenfield capex that we are contemplating going ahead. So only factoring that into what will the numbers translate into or the growth numbers translate into was my question. So if you could, when you are giving us an understanding about the brownfield expansion, which will be live before quarter 2, and the greenfield capex also. So articulating those two, what should be the trajectory match between 19-20%, sir?
Yes. See, I can explain you how this business model is. Right now, we are operating about 65% of our capacity. So basically, it's a 2,000 ton capacity per month, and we have done almost 80% of brownfield expansions. And now, within 1 or 2 quarter, it will be finished, and then the capacity will goes to the 3,500 tons per month. So it is now the plant will be the capable to generate the almost 600-650 crores of revenue from that. So we are aiming for that to reach within these 2-3 years of 500 crores of revenue. So we are targeting about that if we achieve 15-20% of growth from here. So that is a achievable number. And the thing is, in this business model, the 4 quarters jumps very high into the volume. So we want to be advanced with the capacity building, because few months are, as an example, if we talk about the March, we have crossed more than 2,100 tons per month. So these are the months where the volumes go high. So we want to be very much prepared in advance so we don't lose any market shares. So this is how the guidance is that. So
Okay,
it
sir.
is, yeah.
Yeah.
Yes, please go
Sir,
ahead.
yes, sir. Sir, a small point in terms of the RM part, sir, if you could just explain to us how the RM have behaved in terms of the crude oil and the geopolitical issues, and how have we trending for the month of April and May in terms of the business setup and the business environment. And one financial question was, sir, when we look at our current liability part, it is to the tune of 95 crores. So that is the carpenter bonus discount account that we are maintaining. So the net cash balance should be less of this number.
Yeah. So in a RM part, see, vinyl acetate monomer VAM is the key raw material of our product. And yes, of course, it is a crude derivative.
So not getting your voice. Hello.
Yeah, I'm audible now.
नहीं सर आपने क्या कहा लास्ट समझ नहीं पाया.
Yeah. So the RM part, the VAM, VAM is the key raw material of ours. So it is crude derivatives. So yes, it is affected because of these situations. And I believe that if the situations get normal as a world level, then it can be come within the line within 3 months around. But it is very much early to say that, because there is the situation is not stable right now. But we have taken the price rise, and almost 70% price rise, given the effect from the 1st of May. So maybe it can start to give the support to the company regarding this.
70% you mentioned, sir. I missed your number.
Almost 60-70% price rise we have taken.
Okay.
But from
And
the 1st May, so not April month, from the 1st May.
We'll go to the next participant, Vidish Ashar. You can go ahead, please.
So firstly, congratulations on achieving great sales growth in this quarter. Really commendable and best wishes for continued growth. So I have two questions. Firstly, in terms of sales growth, what percentage has come from price hikes and how much is the volume growth? And also of the incremental sales versus last quarter, how much from existing stronghold states such as Gujarat and Maharashtra, and how much from developing states, like you mentioned, UP, etc.
So we grew by 8% in the volume front, and there is not much difference versus that, because as the price rise has just got affected since last month. So last year was the same price what actually were at the time. So 8% is the volume growth for the entire year.
Thank
What
you.
was the
We'll
second
move to
question?
the next participant, Pawan Kumar. Pawan, you can go ahead, please.
Sir, I wanted to understand what will be the advertising expenses that we are planning for FY27. I guess we have spent around 53-54 crores this year. Would it be as a portion of the revenues, or would it be in, I mean, are we assuming some growth, or expecting this to be constant?
Okay. So for the advertising and trade marketing, actually we have spent 4% of our revenue right now. So it is not 50 crore, 54 crores, because it is, I think maybe you are saying with all the sales promotions offers and what the loyalty programs are there. So if we talk about the trade marketing and brand communications, we have invested 4%, and we are aiming to take this at least 6 to 7% for coming years.
This 6 to 7% will take it in how many years?
This from this year, 6 to 7% from this year, and I think we'll continue this at least 3 years from now. After that,
And
maybe
what
the
will we spend this on exactly, in the sense,
sorry.
the six to any incremental money?
Can you repeat the question, please?
Where will we spend this incremental money of the 3% incremental that we are planning to do?
So, see, mainly we are into the trade business, so will depends upon our influencers more, and they are the very much important part of that this journey. So we'll invest almost 70-80% of total budget to the trade marketing, and 20-25% for the brand communications. So these all are the increased of this percentage will go to the more carpenters, to engage the more carpenters into the loyalty programs, to make the more awareness of the product, visibility of the products into the shops, also in shop branding also. So it will be the mix strategies to invest this fund into the promotion of the brand.
Okay. And given we are talking about sustainable 65% gross margins, what is the kind of EBITDA margin band which would be sustainable given the current scenario?
So 23-25% EBITDA margin we have always guided for the longer term. So we are aiming to sustain that. And yes, of course, we are aiming for the gross margin 65% for that. But in this situation, this quarter maybe affect our gross margin because of the sudden price increase into the VAM. So I think maybe this will impact all the industries who can concern about it, this raw material prices.
Okay. And one last question, have there been any price hikes taken by our bigger peers as of now for this in this?
So in April, they have started, and 4 to 5% price rise started to taken, and from the 1st May, it is almost 10% has taken. So it will, I think, it will effect from the 15th of May. We can say mid of the quarter. This the 70% effect will come into the price rise.
Sure. Thank you. We'll take a follow-up from Videsh. He had gone on mute by mistake. Videsh, you can go ahead.
So, sir, thank you for answering that. There was 8% volume growth in terms of sales growth, 8% was volume growth. Also, sir, I wanted to know in terms of the state-wise sales, our main stronghold states are Gujarat and Maharashtra. Just wanted to know how much percentage of our revenue this quarter came from new states, sir. And
I cannot disclose the detail of the state-wise
okay,
volume growth because of the some restrictions, but you can mail us and our IR team can help into that.
okay,
I
and
hope you understand for that.
yes, 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 sir. So one more thing was the receivables have gone up from 125 to 160 crores, which makes our receivable days 4.5 to 5 months. So what was so as you stated, the reason was because of the new states, and you have to give it some time. So what is our plan in the medium term to improve the working capital cycle with the new states?
Yeah. So actually, it is a 2 to 3 years of cycle in newer states as we are into B2C business model. So it takes 2 to 3 years to at least get all the engagement to the carpenters, influencers, the very much visibility of the product, the confidence of the product, to make the relationship with the dealers, carpenters. So it is an entire process, and there is it's a part of making them comfortable and doing the ease of business with us, the policies at that level, so we can get the more market share. So this is the always the strategy of euro since last 18-90 years, and now we have very much experience that if you see about the all the balance sheets, we have not above 1% of the bad debts. So it is very much controlled, and it is all about the relationship with the dealers and the carpenters. So these are the strategies that we are moving into the newer states, but we should aim for at least after 2 years that state should be very much stable, and we can at least maintain 120 days of data cycle. So we are aiming for that within these 2 quarters we can control that.
Thank you. Sir, we'll take the next question from Venkatesh. Venkatesh, you can go ahead, please.
Uh, Thank you. Thanks for giving me opportunity. My question is about, last participant asked the same question. It is more about the receivables. So if you can give me little more clarity on receivables, because from last 4 quarters it kept on increasing. Of course, I know you answered it. A little more brief on the receivables, that's all.
Sure. So, see, we have differentiate ourselves since 2013. Earlier, Euro was with the typical distributor model that we make the channel partner distributor, and the secondary payment is the responsibility of the distributor. After that, we have moved to the stockist level. So we have created 54 branches across these 14 states. So these are the inventory transfer to these 54 branches, and from that we supply to the retailers. So that sales come to the companies in balance in revenue when the sales come sales goes from the branches. So it is directly to the retailer. So our debtors, what 150 crores are there, that are very much spread to the 12,000 across retailers. So if we go about the overdue amounts, so it is not about the 1 or 2 lakhs per dealer. We have mentioned that into our this investor presentations also, that can give you the more clarity how this model works. So it is very much spreaded, so that is not we cannot the risk the fund, and that's why the reason that we are able to grow that much. So this is our strength. So I have never guided that about this can be the cycle below 120 days, but if we are aiming that if it is maintained 110 days, 120 days, then company has the enough strength of the cash flow also, and whatever the fund we are needed for the greenfield or any expansions, that can easily achievable by the internal accruals. So this is how this model is. So yes, of course, it is 150 days, 160 days is a little bit higher, but we can control. And if we go about the past, if we see about the 21, 22, 23, we have controlled that within 118 days around. So within this next 2 3 quarters, we'll control this.
Can we take it in this way, in the sense, going forward, you will be able to maintain between 1 and 2 lakhs for each dealer, and you will bring down the inventory cash flow level to 120 days. That's what you mean to say.
No, 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 no. See, overdue payments. So if we talk about the 150 days, 140 days, about that are the very much overdue payments. So if we go into the detail of the dealer, so it is not much than 1 or 2 lakhs per dealer. So it is not that much risk about the company, and we
Okay.
can maintain that with making the good follow up, good relationship with the dealers, with the understanding of the markets also. So it is controllable. And in past, if we see about that, company has controlled that data within 115 or 120 days. So it is doable. But we were into the growth journey last 8 quarters. So because of the expansions of the market, this much has gone high, but it can be controllable within 2 or 3 quarters from here.
Thanks. Thanks a lot, sir. Thank you. All the best.
Thank you.
Thank you. We'll take the next question from Mark Singhvi. You can go ahead, please, ma'am.
Yeah, can you hear me? Hello.
Yes. Yes, you are audible.
Yeah, I wanted to ask about how much inventory of VAM do you have right now for how many months?
So we are running with the inventory of 25 to 30 days
Okay, but
of
you
all the raw
expect
materials.
the price to rise further, right?
It is already rise, and not more price from here, because it is almost 100% price rise. If we talk about the VAM, it was earlier 80 rupees, 75 rupees around. Right now it is running 160, 180 rupees around.
Okay, okay. And second thing is we are going to target OEM distribution, so we were not doing this earlier.
Yeah. No, it is not that. So we have started this OEM business since 2020 around. So right now, our revenue, 6% revenue is coming from the OEMs. But as
Okay,
OEMs for the metro mega cities, now OEMs are doing very good into the growing phase. So we also take the leverage of that, and the same white glue are using. We have the four product categories into that, and we are targeting also, and now onboarding more talent to grow this segment. So we are assuming that after 2 3 years, our revenue will be 85% into the into the retail, and 15% around into the OEMs.
okay, okay, okay. Thank you.
Thank you. Sir, we'll take the next question from Vatsal sir. Vatsal, you can go ahead, please.
Hi, good morning, sir. Thank
Good
you for
morning.
giving me this opportunity. Sir, as we have seen that you have a FD of 140 crores. Since it's a long time that you are sustaining with this FD, why don't you invest your money in good mutual funds or stocks, or why don't you buy back your stocks even? And other part, why don't you give a dividend payout ratio, giving more dividend to your investors? If you have such a huge amount of money in your FDs that is giving you a very low margins, very low interest rates. Thank you.
It's a very good question. Yeah. So, if you see last 6 years, we have given 15% of our PAT to the stakeholders as per the dividend, and that is very much maintained. One thing is that, see, this FD is about the also the one liability, 95 crores liability is there. So it is there, but so the internal accruals, this fund we will need it from the growth. So as we are now moving to the that journey, that as a euro now we are the almost reaching the second largest player, and there is a huge gap between the industry's dominant player and euro. So now we are moving towards that. So we need this fund to utilize into the market expansions, in a greenfield expansions also. So see, we have started about that. If we see about the investment into the advertising, branding, and trade marketing, what we have done. So last year that was 1.5 around. This year this is 4% around, and now we are moving into the 6 to 7% around, and we will continue this 6 to 7 or maybe 8% around next 3 4 years to grow and capture the more market share. So right now the companies needed this fund, and the competitions will be very much tougher in coming years as we will cross above 500 crore of top line. So this is not the time to diversify this fund, and but we can have the regular meetings with the board also, and we are working jointly closely for these strategies. But right now it is not into the plan.
Further to add to this, if you see the latest balance sheet, we have deployed money into liquid funds to the tune of 46.8 crores.
Sir, we'll take the next question from Dikshit Doshi. Dikshit, you can go ahead, please.
Yeah, thanks for the opportunity. Can you hear me?
Yes, you
Yes,
are.
you're audible.
Yeah, thank you for the opportunity. Firstly, just a clarification. You mentioned 15 to 20% growth. So this kind of growth we are targeting a volume growth or the overall company level growth?
See, volume growth, the growth should be always by the volume. And if we talk about the last year, it is not much difference. 8% was the volume growth and 11% was the revenue growth. So we are targeting that at least 15 20% of volume growth we can achieve to achieve our 500 crore of benchmark.
Okay. And when we assume say, or target say 15 20% volume growth, our established states, let's say Gujarat, Maharashtra, those states will grow at what, high single digit, and the additional growth will be from new state. Is this the fair assumption?
It is a fair assumptions, but still, if we talk about our five mature states, still there is a very much opportunity lying. If we talk about the Karnataka, if we talk about the Maharashtra, so yes, we can say that that growth can also contribute, but it will be parallelly newer states also. So all to put together, efforts will be done as going more deeper into the states and also wider to the states.
Okay, and lastly, you mentioned a 60 to 70% price rise we are taking from 15th May.
Right.
Okay, okay, that's it from my side. Thank you.
Thank you. Sir, we'll take the follow-up question from Saket Kapoor. Saket, you can go ahead, please.
Sir, as a percentage of the revenue which we book, what is our RM contribution, and what is the contribution from VAM?
It is almost 90% of that.
Okay, so sir, if we extrapolate that, then the revenue for the current year would be would be rising in terms of the price hike that we have taken. How should we factor in the revenue number for the current year if we are increasing the prices by 60 70%? That will translate into 60 70% growth in the revenue, or I'm missing something, sir?
No, so it is, see, it is too early to say because just from the 1st April, the price rise has started. And now after 15th May, it will be again the second price rise. And the situation is not now stable. So we have not of correct assumption about that the van prices will be stable for the next 12 months or 3 months or 5 months, or we don't know about that. So it is too early to say that what will be the revenue impact into the growth percentage. But right now, I think we should focus for the volume growth as the situation is not normal right now. So it is too early to say with this quarter. I think in a quarter two, we'll get the more clarity about the consistency of the RM prices.
And sir, will this lead to demand destruction also, or what is the filler we are getting from on the demand side of the story when we look our product which goes into the furniture segment? टोटल सर कॉस्ट का कितना परसेंट हमारा प्रोडक्ट जाता है? कोई भी फर्नीचर अगर मतलब if somebody takes and undertakes an activity, so how can you just give us some color on the same, because that is these are phenomenal rise and need to be absorbed. Otherwise, that could lead to demand destruction. Or what is your take on this here?
Sure. So it is almost 5 to 10%. So if we talk about if the furniture cost is total 10 lakh rupees, then 50,000 to 1 lakh rupees this is used into that. So it is 5 to 10%. And see, it is about the, yes, it is impacted as the situations, the gas cylinder situation was not normalized last 2 months. So the always the labor thing about the migrate to their natives. So mostly the carpenters are from the Rajasthan and UP. So we are seeing that little traction into that. They are migrating into there's particular states because of the LPG issues and everything. But it has not much impacted as the quarter four, the volume was good. So I hope that within this 2 3 months, the situation will get normalized.
ओके सर, ओनली टू कंक्लूड, सो एज ऑफ नाउ ऑफटेक हमारा नॉर्मल है, जो हम जो प्रोजेक्ट करके चल रहे हैं, अभी ऑफटेक में कोई परिवर्तन नहीं दिख रहा है आपको, या कोई
Not much. See, no, I believe that there is a huge expansions into the current cities, metro megas. The governments are now moving towards the India growth story. So in a longer term, it is not much. It should be affected. Yeah. So it will maybe affect 1 or 2 months, not more than that, I think. Yeah.
Thank you. Sir, we'll take the next question from Bhavani Mishra. You can go ahead, please. Sir, we'll move on to Harsh Chaurus here. Harsh, you can go ahead, please.
Hello. Am I audible? Hello.
Yes, you are audible.
Yeah. Hi, Utkarsh. Good morning. So sir, I have a question. You mentioned कि in our matured markets, we are growing around in a high single digit. But recently, I did a channel check visit to almost the clusters of carpenter like wood market in Mumbai. But where I observed, like we still have outlets out of three, out of one store we have at present. So, like, despite being a matured market, why there is such a low penetration in store? And I'm not talking about small stores, I'm talking big stores. So, being a matured market, our product is not went to almost all the stores. And so, I'm not understanding like why are we moving to new states? Because we are still, I believe we are still underpenetrated.
Yeah, you are very right that because it's an ocean of that. So that's why we have that opportunity, and that's why we are aiming for that. So it's a more than 7,500 crores of market, and we have reached almost 300 crores. Can
Harsh,
you?
there is a background voice coming from your mic.
Is it correct now?
Yes, please.
Yeah.
Yeah. So once
So yeah. These are the opportunities lies into the market, and you are very right that it is a we can say that out of three or four counters we are present into one counters. That's why we are into the 20% of market share into the Maharashtra. So it is long miles to go from here, and that's why the growth will become from the existing states also and the newer states also. So that's why we have decided that we'll state these 14 states plus two states we are adding, and we are going much more deeper. So we have not started Chennai yet, we have not started Kerala yet, and not Jammu Kashmir yet. So that these are the reasons that now we want to go more deeper into that, and this is the opportunity actually into the market. So it is the doable growth that if we aiming for the 1,200 crores of revenue, it is doable.
So my reason to ask this question was because why to go, like it's obviously it is very good to go in new states, but where we have already built a relationship with the dealers, the carpenters knows our brand, which I came to know at least from Mumbai market. It is much easier to penetrate in multiple stores like first, and we can be more aggressive while this like currently we are going in high single digit. by doing more aggressive in matured markets, we can grow double digit? That was my question.
So, but see, in a channel check, it is a very deep, deep subject is there. And if we talk about the Mumbai, then we are the first company in within these 70 years of journey who has achieved this number. I cannot disclose the exact number of the volume into the Maharashtra, but these are the things happen, and that's why that revenue we have generated of 100 crores of revenue into the quarter four. So we are going much deeper, and this quarter four is a result that it is doable. And if we see about the quarter four number, it is exponentially as compared to quarter three, right? More than 30% growth is there. So these are the reasons. So yes, of course, we are going much deeper, and you are very right. That should be the strategy. But our strategy is into that, and that is the reason that we are able to maintain it is a debt free with this maintain this 27% of EBITDA, because if there is a no repeat customer, there is no any business can make the profit. So we always believe into the repeat business and more deeper, more volume. So we are into that, and yes, of course, we'll not go about that only focusing on the wider the strength, but we are on to the deep, going deeper more.
Thank you, sir. We'll take the next question from Bhavani Mishra. Bhavani, you can go ahead, please. Bhavani, you there? Sir, we'll move on to Jay Trivedi. Jay, you can go ahead, please.
Hello, am I audible?
Yes.
Yeah, thanks for the opportunity. My question is, while it is good that we are getting into new states and we are expanding, my question comes very much inbound, where there are players like Jeevan Jor who are setting up capacities in Gujarat. Do we see it as a competitive threat, or how are we assessing it? What is your take on that? That is my first question.
Jay, I suggest you to be focus of our questions only. Cannot talk about the competitions. If you have any, you can please mail us. We can definitely answer for that. But in general, yes, we can say that we are very much aware about this. And as we are into 35% presence, and though we are a very much old brand, since 20 years, Gujarat is very much strong base of ours. So we have the very good relationship with the dealers, with the carpenters, very good strong network. And competition was earlier. It is not that today now there is a competitions that was from the first day, but though we have understand the market and we have created our niche, so we are very much confident that we'll figure out the way and grow from here.
Definitely, definitely, sir. I totally get your point. Also wanted to understand, while we are very much strong in the wood adhesives, the white glue adhesive space, uh, are there any adjacencies when we have multiple product offerings? The mobilization of product is faster with the dealers, or Euro standalone wood adhesives is enough for a dealer to give away other products like do these products sell in a basket, or it is a one-on-one conversation? Just wanted to understand that.
Sure. So the answer of this question is, if there was a problem for that, then it was not possible that we are gaining getting this 35% of market share in Gujarat. So it means that it is not required, and we have focused, and that is our strength. And this is a market of 8,000 crores of market pan India. So it is a long journey to go, and we want to be focused. We want to be stay with the single product at least 1,000 crore of journey, and after that maybe we can think about the adding the new products for that.
Definitely, definitely. Those were my questions, sir. Thank you so much. All the best.
Thank you.
Thank you. Sir, we'll take the next question from Amish Kanani. Amish, you can go ahead, please.
Yeah, hi, sir. Sir, congrats on a good number in Q4. So one quick question was, I was wondering if the offtake for Q4 was seasonally higher, as you know, even dealer would that our raw material VAM is crude linked. Maybe they were anticipating in the price and hence they have probably taken more than required. So if you can give us some sense of, and a comfort, whether the retail demand also was as strong as say 15% plus, if you can give us some flavor there, or is there an inventory at dealer level, which, if carpenters are not on the ground in Q1, my fear is maybe our number may not be. I'm not worried about quarterly, sir. I understand, and I'm more interested in the annual trend. But just if you can give us some flavor of how these things are on the ground, and that is one. And so second, in that extending the same question, so this year if you are aiming for 15%, and you have also partly explained that overall price rise itself is 15%. Maybe we are not looking at a very high growth on a volume terms. I understand you are saying you have an aspiration to at least grow 10% plus on volume term also. But I understand you are saying as of now we are not clear. Maybe by second quarter the situation will be clear, and you may be able to answer us say in the second quarter call. What is the situation? So that is I understand. Question is, sir. This year we are assuming say ballpark 15% growth to reach a 500 crore turnover, sir. For the next 2 years at least, we should be able to grow at 20%, sir. Mota mota 18 to 20%. So, sir, are we, how confident are we that, we should be, more in a band of say 15 to 20% than say a band of 10 to 15%, sir? Thanks.
Sure. So, thank you, Amish, and very much understanding of industry you have, and a very good question you ask about that. What about the tertiary? Because as we have now pushed the material to the markets quarter four, and now we should focus more into the carpenter segments level to offtake the material. So, I think Samit sir is the person who can give you the very good answer of that. Samit bhai, can you add this?
Yes. So, Amish, good question, first of all. So, see, I'll tell you about the Q4. Basically, if you see the business dynamics, so Q4 has always been a heavy quarter in the business overall, right? So that is where, so it is not because of the fear of price rise and all, they have stocked the material and all. So that's what the first answer. And just to add in what Utkarsh sir said, that yes, our focus going forward is more on a tertiary. So we are completely moving our entire focus towards demand generation, and entire transformation journey is slated towards in this direction only. So we are very much confident that this is what we can continue going forward.
So that's why we
And
are investing more into the carpenters trade marketing.
yeah. So we have increased the budget also. If you see, our marketing budget is majorly skewed towards trade marketing, which is trade is our basically carpenters and dealers community basically. So that is where we are going very stronger and deeper to penetrate and gain more market share by these actions basically.
And about your second questions here, you are very right that if we want to achieve this 500 crore rupees, then definitely we'll need to focus for the 18-20% of growth. And you are concerned about the about the what the situation is going on, and the demand will be same or not. But as I explained that there is not much difference into the down level. All the constructions are into the pipeline, all the real sectors are now into the streamline. So it is there. The carpenters are available into the market. And that's why the reason that our redemptions are very high. We are getting the good response into the loyalty programs. So there is no worry about our brand is the because of that we are now right now we are a smaller part of the total industry. So it is a huge gap and huge opportunity lying about that. So it will not impact because we need to take the market share from the existing market. So that's why this is a doable number, and that's why if we talk about, I explained that in the last 8 quarters, the 5 quarters, we can able to achieve this growth. If we see about the last two quarters, if we talk about the quarter two, it is a 20% of growth. If we talk about the quarter four, it is a 16% growth. So it means that it is doable. Just we need to maintain that every quarter, and that deep focus and hard work we need to do about that. And we all are the team, as we are very much sincere and very much going deeper to achieve this number.
Yes, and just to add in what sir said, that because of this only, like we are confident that we can drive this number. There is huge scope, And as a part of our transformation journey, we are very conscious about what you are saying basically. So that is why our work right now, transformation journey, is going on towards both deeper and wider reach for the Euro as a brand and all products also. So that is where we want to have multi-fold drive in existing markets, as well as going for a few new markets also to start our presentation, our presence basically in those markets basically. So that's where combined efforts will put together will lead us to the required growth numbers we are driving.
Sir, we'll take the next follow-up question from Mahak Singhvi. Mahak, you can go ahead, please.
Hello. Yeah, I wanted to ask how was April because you are hiking prices from May, so dealers must have brought in quantities, right?
Yes. So yeah, but April was good, and April we can say about that because of the price rise is going to in the May. So dealers have get that trying to get that benefits and that opportunity. So April was good into the volume wise.
Like, are you not going to give me a number?
It is not possible. Sorry about that.
Of course not.
It's not. But we can you can contact our IR for anything else.
Okay. And have we thought about backward integration in raw material production, the
So
economics of
see,
that?
yeah. See, I explained about that VAM is the key raw material, and it is not manufactured in India. The material is totally imported, and very huge giant companies are into that, and so that's why it is not workable for the backward integrations.
Not workable at all.
Right now, this volume is not suitable for that.
Okay. And any R&D spend on new products in white glue right now? Are we doing anything new?
So if we saw about the history of the euro last 15 years, so every 2 years we have added new products. So right now, what products we have into our basket? So that is the complete the applications wise, all the needs by the furniture gluing industry. So if we talk about, we have the different elements of the waterproof, we have the fast drying, we have the high coverage, high grab adhesives. We have the OEMs, four product range into the OEMs also. We have the cheaper grade also. So everything is covered. We have the PVC glue which are covered, the acrylic and PVC sheets to the MDF and plywood. So entire range are covered right now. So there is no any spend into the R&D, but we hire the technologies when it is needed. So right now we are at least at that level that we have covered all the products to gluing industries for the furniture.
I will take the next question from Vatsal sir. Vatsal, you can go ahead, please.
Hello, am I audible?
Yes.
Yes,
Uh,
yes.
just a follow-up question. So you talked about the current liabilities coming from the reward program. So when these numbers, when the carpenters start redeeming their amounts, so our EBITDA margins would go down. So can you tell me when will this EBITDA margins be normalized to 20 to 25%?
So see, it is not much impacted. If we see about the last year, so it is all only 4 crore rupees of difference between the provisions and the redemptions. So it is hardly 1.25% only. So it will not impact, and it is running on in a smooth way. So we are expecting the same for the next coming quarters.
Sir, we'll take the next question from Vidish Ashif. Vidish, you can go ahead, please.
The past few years, the we've been in the 250 to 300 crore revenue range, and even our profit after tax has been in a similar range. So, do you think, sir, the next 1 2 years we could see a solid growth coming, and also will we be able to maintain our capital allocation strategies? What I mean to say is, will we be able to see sustained ROE and ROCs in the next 2 to 3 years?
Yeah. So, yes, we are into that. And as I explained, that 20 to 25% is a long-term EBITDA margins, what we want to sustain. And if we see about the last 3 years, it is very much into the line. And if we grow by the 15-20% margin volume growth, then the margin will be stable and it will be the overall also will be the control. So it is not about that within this 2-3 years. What you are saying that the exact number we can disclose about that.
Sir, we'll take the next question from Harsh Chaurasia. Harsh, you can go ahead, please.
Yeah, hello. Yeah, so on the price hike, sir, like before the 60 to 70% price hike, how much, like on an average, how much our product portfolio would be compared to our the market leader basically in terms of pricing? And post this pricing price hikes, how much premium would be charging versus the market leader?
Can you repeat the question, the first question?
So basically, my question is, like before the price hikes of 60 to 70%, how much our portfolio pricing was like cheaper than the market leader, like, and now after the price hikes, how much premium would be charging to versus the market leader?
See, it is almost we are at par with the industry and the market leader. But if we see about the lending cost, then euro is always a good attractive as compared to that industry. So we are more into the doing the sales promotion discount to the dealers and the retailers. So it is that. So if we talk about the market price, that is almost similar to that at par for that. And if
Okay,
we talk,
so
yeah.
this is the post price hikes, like the pricing would be almost par to the market leader.
Both. So if we talk about the earlier also, and it is for the post also for that because same we have
Okay.
same the taken the price rise also. Yes.
Got it. Got it. And so just one more thing on the branding communication which you mentioned. Like now we have started going in South as well. Like you mentioned, in future we are looking to go in Chennai, Kerala market. So do you think the current brand ambassador we have, like he's very famous in the like nowadays people prefer a regional face than a national face,
Mm-hmm.
especially in South. So do you think like we would need like our branding would need North a different brand ambassador and South we will be adding one more brand ambassador, or this is a wrong thing which I'm in the way I'm thinking.
No, no, it is not a wrong thing. And Harsh, it is a very good questions and suggestions you have had. So yes, of course, this is in our mind. But right now, as we are more into the central and western part, so it's a Bollywood community, and Pankaj Tripathi is very much famous into that. Also, the one main thing is what our influencers are belong to. The carpenters are from the 90% are from the Rajasthan and UP, so they are very much with this existing brand ambassador. So that's why we have chose them. But definitely, South is a different part of that. And if we talk about the Tamil Nadu, if we talk about the Andhra, it is a different part. So when we'll go more penetrated and to go the more generate the volumes, we need to think about that also. So we are
Yeah.
very much aware about that, and it's a very good suggestions of you also.
Yeah, and Harsh, right now we are basically into there is a huge way to cover in HSMs, basically Hindi speaking bed, Hindi speaking markets, basically. So we are very conscious about, as MD sir said, that about the language markets. And so accordingly, right now, as he rightly mentioned, that most of our community, basically carpenters and all, they belong to Rajasthan and UP. And if you go to even down south, also you'll find that most of this carpenters community are coming from this state. So they are very well aware about the Hindi and all. And that is where we chose as a unanimous choice as a Pankaj Tripathi at this moment. We may look at, local face, maybe it's a long shot basically. As of now, I think this is what we are going to continue.
Thank you, sir. We'll take the next question from Varun Tanna. Varun, you can go ahead, please.
Hi. Just wanted to understand, are we thinking about going into general purpose adhesives at any point, in the 8 gram to 200 gram packaging space? Because will we have to tweak the formula too much to get into this space, or it's something we're not considering at all?
No, Varun, we are not considering at all because it's a different segment and it's a total different distributions and network. It is more into the stationaries and pawn shops and everything. So it's a different distributions. Our expertise is more into the furnitures, to the carpenters work, gluing solutions to the furniture. So this is the market what is 8,000 crores above. So we need to speak about that.
Sir, we'll take the next question from Mark Singhi. Mark, you can go ahead, please.
Yeah, I wanted to ask that we have done only 60 to 70% hike in product. 100% is the rise in raw material, and 6 to 7% we are going to spend on advertising, and only 15 to 20% volume growth. So, are we expecting any what we call operating margin reduction this year?
It is too early to say for the entire year, but yes, of course, it will affect on the quarter one. And I believe that all the chemical industries, pharma industries will get this effect into the quarter one regarding the EBITDA. Because as only I think B2C industry, of course, the price rise not pass from the second day. But B2B industry maybe will less bleed, but B2C model will bleed, but we cannot predict about the next three quarters because it is about this geopolitical situations, but I think it will be controlled within 2 months. Then maybe from the next three quarters we are not much affected as we have taken the price rise, but I think we are expecting that maybe very near soon there will be again price rise we need to take to cover the difference.
Yes. And what else can we do to protect the margins? Anything else?
Unfortunately, it is uncontrollable for each and everyone's right now. It is facing the situation. So I think quarter one will be the same situation for all the industries right now.
Okay. Okay. Thank you so much.
Sir, we'll take the last follow-up question from Varun Datta. Varun, you can go ahead, please. Varun, you there?
But I think he's finished his question. We'll take one last question in the chat from one of the participants. What is our plans to list on the NSE?
It is in process. We are into the process, and very near maybe it will listed on the NSE. So we are into that process.
Sure, sir.
Since there are
The
no
last
further
question for the
questions,
day. Would you like to make any closing comment before we end the call?
So thank you very much for trusting our brand, trusting our management. So yes, we are on it and we are working hard to achieve more and grabbing more market shares. So I hope that you all have understand the current situations about quarter one. So maybe very soon we all come out from these situations and we can contribute the good growth into the industries. So thank you very much for trusting us.
thank you to the management team for your valuable time, and thank you all the participants for joining on the call. This brings us to the end of today's conference call. You all may disconnect now. Thank you.